Well, welcome to those who are logged on. Well done for arriving on time. We've had a record number of joiners, of people who've indicated that they want to see this webinar. I think it got to the point where it was over 350. So because I'm told that there can be a bit of a log jam in people trying to log on, if you don't mind, we'll sort of wait for a couple of minutes after 7 o'clock so that the people that get on after that, we don't have to repeat what we're saying. So I hope that everybody's had an interesting day and the not too stressful with the thoughts of going back next Monday, and that obviously we hope that you're going to enjoy the presentation this evening. But obviously I can't see any video faces, so in the audience there are probably lots of UNW clients. So hello to you. I hope that you enjoy this. I hope that you are doing well. You'll see probably in the box beneath me, if your system works like mine, my colleague Katie, who's going to be our star of the show. Now I'm just looking here. There's a message coming through for me here. Ah, yes. Now there is a chat box. And so for those of you who are already logging on, we're going to try and use this chat box. There'll be, when Katie's talking, I'll be looking at this together with Mike Blenkarn, who's joined us recently actually from one of our competitor firms. So I now have two number twos, Liam Richardson, some of you might know, and Mike Blenkarn. So Mike is going to be helping me field questions, and I see there's something coming in from Ian McLean all the way from Guildford, although I suppose that probably is totally irrelevant in this internet era. You might as well be next door. So let's think now. How are we doing for time? It's 2 minutes past. I'll just give it another minute if that's okay, because I think people are still signing on. The degree of interest in this was far greater than expected. When we first came up with the idea of having a webinar, I was slightly concerned. This is the first one we've done at UNW Dental, and I thought, won't it be embarrassing if we have 3 people watching, me and Katie? I shouldn't have worried, because within about 2 or 3 hours of it going online, we naively had a limit then of 100 attendees, and that was exceeded by within a couple of hours of it going live. So it kept on being increased and increased. Oh, I see there Steve Pratt is saying hello. So our good friends from Lloyd's, and those of you who are Lloyd's customers will know, and I'm not just saying this is not like Bruce Forsyth where you're all my favorites. Lloyd's definitely are one of my favorites. In fact, unless there's somebody here from any of the other banks, you are my favorites. And Steve is very senior with Lloyd's, and we've chatted about the way that Lloyd's can help in the sterling job that they've done. Interestingly, Steve, you know, the example I think I gave to you, when dentists were complaining about banks not being able to deal with their CBILS applications very quickly, I said to a few of my dentist clients, imagine the day that you're allowed to open, when you have a queue of patients outside of your door all wanting to be seen and blaming you because you can't see them, and it won't be your fault, you can't cope with the volume. That's what your banking colleagues are like at the moment. And I know that all of the banks did a sterling job and things quietened down. Okay, so we're now at 4 minutes past, and so let's get cracking. So my name's Alan Suggett. Many of you know me. You know me because I'm your accountant. That's good enough reason to know me, isn't it? Or you might have seen me in other people's webinars. So now it's time for me to welcome you to my home. And actually, this is my home. You can see it's my dining room. There's painting behind me. We've had something like over 350 requests to join in this webinar, which just illustrates the interesting situation that we have with enthusiasm for dental forecasting currently. So for those who don't know me, I'm a specialist dental chartered accountant. I head up the UNW Dental Business Unit. Amongst other things, I'm on the NASDAQ Technical Committee. I've worked for the last 10 weeks or so, almost exclusively for no fee income, poor me or poor my partners, mostly for dentists, but also liaising with the BDA. And more recently, I even had a request for information, I better whisper this, from the Department of Health and Social Care. Now, what they're doing with that information, goodness only knows. I hope they're using it to create a really good position for dentists going forward. With my team, we look after approximately 500 dentist clients located over most of the UK. But we can always ask for one more, especially if it's you. So UNW has a team of approximately 110 people, many of whom used to be with the big four accounting firms, mainly PwC. And this is quite unusual, but it means we have some people with very high technical experience, and that can be helpful when it comes to tax planning, for example. When things get back to normal, which they will, that will be the #1 priority, I'm sure, for most of the people watching this. We mainly look after owner-managed businesses, but have some national and international clients even. And of course, lots of dentists. In fact, I only look after dentists. So what's this webinar about? Firstly, it's to illustrate that our newly created, very comprehensive dental recovery forecasting process. It's to help you form a better view of what type of recovery forecast would suit your practice best. So it's a general explanation of what is of interest to you. But secondly, there's a bespoke opportunity. It's an opportunity to help some practice owners who decide that they'd like to work with us on a project basis and to have their own bespoke forecasting system created with our help on a fixed fee basis. And I've got a good dental analogy of what this is all about, because recovery forecasting systems are just like dental PPE. So why is this? Firstly, PPE comes in different forms, and it can be difficult to evaluate which type is most appropriate for your practice. And secondly, PPE can be difficult to obtain. Now, both of these problems apply to dental recovery forecasting systems. So what are the different forms? Well, in the dental world, you have FFP3, gold standard, needs individual fitting. Same thing with the top-level forecasting systems. They're bespoke and require intensive hand-holding from a finance professional to create them. FFP2, no individual fitting, perhaps fine in the dental world, but interestingly, difficult to replicate in financial forecasting because most practice owners don't have in-house financial expertise at a high enough level, and that requires external assistance, which brings with it a cost, and you're back to FFP3. And then there's what I understand is IIRC. And if that's not right, then I'm blaming my dentist son. Probably not good enough in a dental recovery situation, but maybe we have something that falls into this category. We've sent out lots and lots of free template recovery forecast to dentists. Now, in terms of difficulty to obtain, there aren't many UK suppliers, both for PPE and dental forecasts. And in the case of forecasts, you can't buy a container load from China, I'm afraid. So let's look at the market for dental forecasts generally. And I'm happy to talk about other financial suppliers because for most suppliers, the ability to supply is likely to be limited. So we have a problem. Few suppliers, and most of them can't service many, many different clients. We're in that situation. Now, the market leader is spot on. Their system is extremely comprehensive. They've held webinars with the BDA. Some of you will have seen them, and they are definitely suppliers of FFP3. Then we have Johnny Minford, another NASDAQ accountant, a good friend of mine, like me, spending lots of time helping dentists free of charge. And like UNW, he has a free recovery forecast template, and he's working on an FFP3 equivalent at the moment. Then there's Chris Barrow. I know Chris and his Extreme Business Academy have their forecasting system. There are likely to be others. I don't know who they are, but I'd like to know. Please tell me. And then there's us, UNW. As I said, we've sent out many of our free templates. But, tongue-in-cheek, this is a bit like the equivalent of those face masks that you make from a sock, where you cut the end of it off and loop it around your ears. It has its place, but not a very important one. I've described ours as being a bit of a scene setter. So, we've also developed our FFP3 equivalent, which is why we're here tonight, and we'll talk about that soon. But before we do, there are a couple of housekeeping points. Firstly, if you aren't already very familiar with Zoom, it might be helpful for you to know that if your screen is obscured by my lovely, handsome face and Katie's pretty face, then if it's obscured by that, you can move it out of the way to see what's behind it. Just move your cursor over to where the video boxes are, click on it, drag it and move it, and we'll get out of the way so you can see the interesting stuff behind. That is actually quite important, otherwise you'd be very frustrated. Secondly, when you exit this webinar, Zoom will open a survey page in your browser. Now, please help us by spending, it'll only take a minute or so, by giving us valuable feedback for future webinars. Now, I've got another analogy for you. Katie's going to like this one. This time it's McLaren cars building COVID ventilators. Now, just like McLaren, UNW have a team of very talented engineers who, because of COVID, are underutilized. In our case, our engineers are corporate finance modelers, and one of them just happens to be married by a remarkable quirk of fate to a private dental practice owner, is hands-on with his financials. So as McLaren are to COVID ventilators, let me introduce you to Katie Lamb, UNW Corporate Finance Executive and creator of the UNW Dental Recovery Forecasting Process. Over to you.
Thank you, Alan. Hi, everyone. So I'm Katie. I'm a senior manager at UNW. I work in the corporate finance team, and day to day, I'm involved in mergers and acquisitions. So things like finance raising, buying businesses or selling businesses. And as part of that work, I spend a lot of time with owners and management teams as they think and plan their strategy. But because I'm an accountant, one of the main tools I use to do this is financial modelling. Now at UNW, we build very sophisticated bespoke forecasting tools for clients, and our clients range from owner-managed businesses to private equity-backed businesses and PLCs. And these models are always tailored to the client. And as part of my job, when working with a client, I have to really very quickly identify and distill what they are telling me into key drivers for that business. Then use that information to create something which allows them to forecast in numbers all of those operational decisions that they're mulling over. And not only that, allow them to change and vary those operational decisions so they can see the impact on the numbers quickly and efficiently. The main reason, as Alan said, he's asked me to get involved is that I'm also a wife of a dentist and we own a practice together. And luckily or unluckily, he's also invested in a second one quite recently. I'm quite heavily involved in the finance and the business strategy side of things. HR sometimes seems to fall at my door quite often too. So as an advisor, that actually gives me a pretty unique insight into what all of you guys are going through, because I'm going through it too. And in the past, when we're talking about financial models, it was probably pretty easy to come up with a set of forecasts to plan for the year ahead, especially if your aim was to deliver more of the same. And even if you wanted to forecast growth, you have a pretty certain base level to multiply everything up from. And a lot of forecasts currently out there for the dental sector, particularly the free ones, asks the question, so what do you think the income is going to be as a percentage of historic turnover? But that's what I want to know. If I had that answer, I probably wouldn't need to ask the question. And the reason why that is so hard is because there's so many moving parts. And in coming out of lockdown, the mix of work that the practice will do, can do, is going to look quite different to what it was historically. So how will you get meaningful answers to guide your business decisions that, worst case, could jeopardize your survival if you can't even form those thoughts using the real life variables or levers that you can see operationally as a practice owner? So things like, what's the capacity of your practice? How much AGP versus non-AGP time do you have? The fees that you set. And actually, until you get a real sense of that, how do you even tackle the question of what percentage should I pay my associates? And what's going to be really important in the months ahead is cash. Cash, and the timing of cash. When you start up again, the business is going to start sucking up that cash. You're going to be unfurloughing employees. You're going to be buying materials again. You're going to be incurring lab fees. How does your credit arrangements impact all of this? Depending on how you ordinarily get your patients to pay and your practice structure, you might find that you're not actually going to be getting any extra income compared to the lockdown months to fund it. How long is that going to last? So the model we've developed is designed with all of this in mind. It allows us to give each practice a semi-bespoke model tailored to their particular set of circumstances and what they consider as the key drivers or key performance indicators. And I think the best way to illustrate something like this and how it works is to go through an example. So welcome to our dental practice. Alan is our principal and he owns a 3-chair dental practice. He has a £50,000 NHS contract and 1,000 planned patients on practice plan. Pre-COVID, he was open 5 days a week, Monday to Friday, 9 to 5. He worked 3 days a week and has 2 associates. Katie, she works 3 days a week and delivers his NHS contract and does a day of private. She gets paid 45% after labs. Liam comes in a day a week, sometimes a bit less, to deliver implants at the practice. He gets 50% after labs. Alan also has 2 part-time hygienists, Mike and Glenn, who are both self-employed on an hourly rate and works 3 days a week between them. With this setup, last year, Alan generated £550,000. All of this is owned by his company. There's something he's aware of about his NHS contract still sitting with him, but he knows last year he was able to take out £95,000 in dividends from the business. Then along came COVID, and he's been closed, just like everyone else, since the end of March. While they've been closed, he's been getting his associate Katie to answer the emergency calls, and she's been getting her share of the NHS income and the practice plan fee. He's also kept the practice manager working, and he's furloughed the rest of his staff. April was a bit painful when he had to pay his suppliers without any additional private fee income. He's not had that many planned patients cancel, so at least that's something. Not having to pay for all of his staff and getting the £10,000 from the council has also helped. He's not really taken any cash out of the business to help keep it afloat. So right now, the bank still has a few grand in the bank. All in all, he's been pretty stressed. A pat on the back for getting this far, but with reopening imminent, how are the finances going to look in the new world? So luckily, Alan knows a firm of accountants called UNW pretty well, who tells him that now is actually quite an optimum time to plan financially. So as you firm up the clinical side of going back, you can work out the business and financial impacts at the same time. So working with UNW, Alan started working through the input parameters of the model. Now it does take a bit of time investment, but actually talking through these things with someone who is perhaps a little bit detached from the detail helps him to get his mind focused on those things that really matter. So let's have a look and see what this spreadsheet looks like. There we go. So the aim of this model is to produce a monthly cash flow so that you can forecast your cash balance into the future based on a detailed set of assumptions. We've tried whenever possible to balance that level of granularity while maintaining a good level of flexibility so you can run scenarios quickly to play out all of those what ifs. So one of my roles when working with clients is to make sure that we stick to an appropriate level of granularity to give you something meaningful in the most efficient way possible. So this model, just have a quick track. So this is a cash model. It considers the income, the direct costs, other income, if you need to put that in, your staff costs, your overheads, any capital expenditure that you might need to make in the next 12 months, any tax payments that you've got coming up, your financing, any dividends you're going to pay yourself or drawings, and that gets you down to your closing cash balance. And once you have this set up, you'll have an idea of the path you should be heading on. If a month doesn't work in the way you expect, you have the ability to ask yourself why. Because you've used proper assumptions to drive that, say, £10,000 of private fee income, you can monitor it against reality. You forecasted £10,000 based on the assumption that you work for X hours and do Y things. if you don't hit that £10,000, you can ask yourself whether X and Y really did happen in the way you thought. And if they didn't, why is that? And you can flip that on its head. If you do better, you can ask yourself why that is. So you can try and do more of the same. You might even want to form some kind of key metrics so that you can monitor yourself. So here's a bit of an example of a dashboard. So bank balance is obviously key. You might want to have a look at what the forecast is saying about your level of income. You can cut it into lots of different ways. The different types of income. Maybe you want to see income by clinician. You want to see income by AGP fees or non-AGP fees, your associate and self-employed costs. You might even want to see what your cash profitability looks like, how each £1 of sales is converted into cash profit. So what kind of information does the model need as inputs in order to give you those meaningful outputs? So the general convention of the model is that any yellow cells are input cells, though I've been told that on Alan's screen it's pink, so you might be seeing pink cells. Any blue cells that you see will be drop-down selections. So step one, you need to put in some history to give you a baseline and something to refer to. So it's important to stress that the model for income and direct costs doesn't use history to derive future sales and costs. And that's mainly because when you do, you are making that fundamental assumption that your sales mix and hourly rates all stay the same. And that's not very helpful when I know as the practice owner, my implant demand might be down. My hygienist can't come back until July because she has childcare commitments. I've got a backlog of health checks that I haven't done for 2.5 months. The mix of services, at least during the recovery stage, is going to be different, and your pricing as a result might not even be the same. So for the purposes of this, you put in your historical sales and direct costs. And that's because you want to still at least have that benchmark to see what your model outputs look like compared to the past, even if it's not based on the past. So your staffing is also something that's going to be driven differently in the model, and it's not necessarily based on the past, but again, good to contrast it for reference. Overheads. Now with overheads, unless you've made some pretty drastic changes, they are probably going to be the thing that resembles the past. So you can use that to help you to forecast the future costs on a monthly basis. And remember, this is a cash flow. So if you're aware of any lumpiness or variance in costs, make sure you put them in the right month. So for example, in Alan's practice here, he managed to negotiate a rent reduction with his landlord for 6 months, starting from March. So he knows that in the first few months of reopening, his rent's going to have halved, but by September, it's going to go back up again. He knows that he's got some lumpiness in his subscriptions. He's got things due in August, in December, that are different to just a simple divide by 12 or the average month. He knows that his accountancy fees, he has payroll costs that he pays every quarter rather than monthly. And then he has a chunky number that he pays after he gets his accounts done. So you can go through the costs and think more and plan more in terms of how the costs are going to look over the next 12 months rather than as an average. So you get right down to here and you might start thinking about the CapEx that you might need to spend. You might have committed to something that you need to put in, or you might need to invest in something in order to open the practice up again. You can put in your tax payments. So in our example, the year end is March, so tax is due in December. Financing. So in this example, Alan has a loan that he put in place, maybe to buy the practice, and he pays £1,000 every month for it. His associate also persuaded him that he needed a CBCT scanner in the middle of last year. So he's started paying for that last year at £1,000 a month, and he'll continue to do so. Dividends, last year he took out 95 grand, as we said. He hasn't been taking anything out, and for now he doesn't want to see what the impact of that is, so he leaves that blank for the time being. So we've done the easy bit. So let's think about how we build that top line income and the costs associated with that income. So in our model, so this is the input tab, the private fee income is driven by the number of hours the clinicians work and their net hourly rates. It's split by AGP and non-AGP to match the way we're all thinking at the minute. There's a lab fee rate, a materials rate, and a PPE rate if you're able or have the time to form your thoughts into those hourly rates. If not, this model does still accommodate a general monthly figure. I would encourage anyone who uses this to consider what an equivalent lab rate is as a minimum, because by doing that, you're going to make your associate fee calculation just that bit more scientific, giving you a higher chance of emulating reality. Now, it's important to note that these rates in here aren't necessarily the rates you might use to set your fees. It's the average rate over all of your clinical time. And that's because in this model, we define the NHS and capitation income as fixed monthly fees. And it's up to us to decide how much time we spend on those things in any given month. This fits better in a world where you know that your clinical time in the first month or two is going to be spent catching up on health checks and clean. Therefore, your ability to generate your normal average hourly rate might be suppressed. Your mix of work is going to be different, almost certainly in the first month, or maybe the next 2 or 3, as you catch up on all of those patients who needed patching up but weren't bad enough to be referred to urgent care during lockdown. And I know some of you will have already done a bit of work around this, but I also know many haven't. So what we've created is an extra mini model within the model to help you to get those thoughts in order. And that's what this weekly profiles tab is. So this doesn't link back into the main model. It's an extra aside to help you to focus your mind on what you're doing operationally and how that might impact your numbers. The whole aim of this sheet is to distill everything into a meaningful set of hourly rates to put back into the model. So when you're in a steady state, one of these profiles is probably enough. But in the current climate, you might need one for each month as you recover. You might even need one for each week in the first month or two. So you start off by planning the week, which I'm sure many of you are already doing. What staff do you need? So you've got your Monday to Friday, Saturday, Sunday divided up into sessions. Think about the staff that you need and how many surgeries do you have, those hours per session that you're going to have. How is that split between AGP and non-AGP? Who's the clinician that's going to be in there? What's the support that they're going to need? And very quickly, you'll get a sense of what your staffing needs are going to be as well. Once you've managed to work out how that week looks, start thinking about the clinicians themselves. What mix of work will they be doing in their AGP and non-AGP hours? And what hourly rate and contribution could that generate? So if we go off to the side, you can see that here we started filling out a profile for Alan. He's filled in all the different things that he thinks he is going to be doing in terms of AGP treatment and the fee that he could be or will be charging for it. He sticks in his lab fee associated with that particular treatment. In this instance, Alan didn't really know what materials or PPE he can attribute to each treatment, but some of you might have already thought about that as part of other work that you've done. If you know, you put them in here. If you don't, you can put in a fixed monthly cost later on in the model. And then you also enter the time that you think you will need for each of these treatments. And then finally, the treatment mix. So for this set of treatment items, how do you think you will be splitting your time? So in this instance, for AGP treatments, for this particular profile that say Alan might be using in month 1 or month 2, he's decided that I'll be spending 50% of my time on fillings and 50% of my time on root canals. And with an efficiency or a utilization of 80%, he'll get down to an average hourly rate of £186. And then here the model also spits out the lab fee hourly rate, if it's applicable, materials hourly rate, and the PPE hourly rate, and gives you a sense of that contribution that you could be getting as an average over this particular treatment mix. And you do the same for non-AGP items. Now remember, you're going to be doing plan checks or health checks and maybe things to do with the NHS that you might not necessarily recover additional fees for. So you would put that into here as part of your treatment mix at a 0 fee, so that it's accounted for as part of that average hourly rate that you'll be generating. And you do that for every one of your clinicians, so that you're not averaging, because some clinicians might be doing a different mix of work. So you're not averaging over the entire practice, because you might be changing the way that you all work. So Alan might think in this example, I need to think about fallow time. I'm going to leave an extra hour of fallow time for all of my treatments. So what he would do here is say, right, so for fillings, rather than 30 minutes of time, it's going to take me 90 minutes. Root canals, rather than 90 minutes, it's going to take me 150 minutes. Oh, that's impacted my hourly rate by quite a lot, down to £90 an hour rather than the 180. Let's start going back and thinking about my plan to see how I can maybe restructure the shift patterns to make more efficient use of my chair time. And this does take time to really think about those hourly rates, but it's so important. So for my own practices, with a bit of guidance from me, this is the exercise that the dentists have told me that they found most valuable. It's allowed them to really appreciate the impact on their hourly rate while they're thinking about how the new world might or could look. And we've actually used this to make decisions on whether to increase fees or not, because here you can obviously stick in a different fee to see the impact on your hourly rate. And you can do it by treatment. So rather than a blanket, everything has to go up by £50, £100, you can see which treatments you'll be doing and which you might be able to justify to your patients a bit better. And actually, personally for our practices, when we've gone through this, we don't think we need to do anything too drastic with our fees by managing our diaries and knowing what we should be spending our time on. And obviously without compromising on what our patients need. But once you have that knowledge, you can form the messages on how you want your staff to direct the patients, because there's probably an element of option that you can maybe delay to a bit later, for example. So back through to the inputs. So having gone through that, you're able to stick in all of these hourly rates, and you do the same for every single clinician, putting all of their profiles in. And obviously you can see there's a lot of space here for up to 10 clinicians. And then you get down to the clinician's working profile. You've already specified what type of clinician they are, whether they're a dentist, hygienist, therapist, other. Specify here whether they're employed, self-employed, whether they're the principal. If they're self-employed, what percentage rate does the clinician work at? What pay pound per hour do they work at if they're self-employed hygienist? If you put in that they are employed, you do the same with an hourly rate and the number of hours worked. If they're employed, you have the option to turn on the furloughing and specify the percentage pay on furlough and the date of return. And over here is just a summary of the number of clinical hours each clinician is working based on the parameters that you've set above. So here is the payment terms. So this is actually quite important. So most associates will be paid 1 month in arrears, and that's what this is set at as default. But perhaps if you find that the next month is going to be a bit of a pinch point, you might see what happens if you get to delay it by an extra month. And maybe that's a conversation you'll need to have. But you won't know to have that conversation unless you've seen how the numbers look. In this example, Katie the dentist had been working for Alan, and she's owed £2,500 from the month before this model starts. So that £2,500 will be paid in June. NHS cash income. So here you can specify your contract value and your UDA target. It assumes you receive 1/12 of your contract value, subject to an abatement adjustment that you can put in here, and that's something that you can flex. It does allow you to track your UDA target and your UDA performance to date, and it gives you a bit of a reference to potential clawback. So it allows you to bear all this stuff in mind as we work out how lay of the land's going to be. And then once you've done that, you need to split that by clinicians so that you can work out your associate fees. So in Alan's case, Katie delivers the whole NHS contract, so the entirety of that NHS income is attributed to her. Planned fee income. So in our example, we're a practice plan practice. We've benefited from the reduction in fees. We've assumed that we're not going to lose many patients, but obviously you can flex that assumption if you want to. And then we need to split that by clinicians, again, so that we can calculate the associate fees. So in our example, we've said that Katie does 1 day of private, and she basically looks after about 20% of Alan's patients. So this is the level of practice plan income that's attributed to her. Sundry income, we might sell £100 a month, and it sort of picks back up again, back to normal. Lab materials and PPE, so lab fees. So this lab fee here, because Alan was able to specify the lab fee by treatment items, we managed to derive an hourly rate for lab fees. So that's been multiplied up with the number of hours that the practice works to come up with the lab costs. But if you couldn't do that, or if you need to adjust for something, you've got some adjustment areas here where you can put in monthly costs. And those monthly costs will be prorated by clinicians just on a simple basis of the fee income in total. And then here you're able to adjust the payment terms. So again, this stuff's quite important because at the minute we've assumed that it's paid 1 month in arrears. But what happens if, you can work out what happens to cash if you pay everything in the same month, or maybe you stretch your creditors a bit and you pay after 2 months, and you can play around with this. Current labs, Alan hasn't really been doing anything beforehand, but if for some reason you have labs from before the forecast started that's due in June, you'd put it into there and you put the payment profile in here. Your expected material costs calculation. So Alan couldn't give the hourly rate, so this is out all zero, but he did know, or he does think, that he's going to be spending £3,000 in the first month, £4,000 in the second, before it ramps back up to his normal spend that he knows he spends on materials. Again, he's able to play around with the payment terms to see what the impact to cash could be if he changes the payment profile. And because he knows he's opening back up again in June, in May, he spent £1,000 just stocking back up, and that's going to be due in June. PPE costs. Now, Alan didn't do it didn't specify the rates by treatment because in our example, Alan's decided that he's not looking at PPE spend per treatment. He wants to do it on a sessional basis. So in here, he's calculated the number of hours divided by sessional hours to get his number of sessions, how many clinicians, how many people are going to be using PPE for every session, and the cost that it's going to cost him in PPE. And he's done that for AGP, non-AGP. He's decided that he wants his receptionists and anyone in decon to be wearing face masks. So he's decided, oh, I might be spending £150 a month on that. Hand sanitizers and cleaners. This is all really there for you to decide what extras you might need to put in and adjust accordingly. And that gets him down to the total PPE spend that he thinks he's going to need. And again, we can play around with payment terms just to see the impact on cash. He's stocked up because he knows he's going back next week. So he's just spent £500 the end of last month, which he knows is going to be due at the end of June. Staffing levels. So the model here allows you to put in all of your members of staff, the hourly rates, the monthly contracted hours, whether they're on furlough or not, or have been on furlough, the percentage pay that they get while on furlough, and the date that you expect them to return. So this just assumes beginning of the month. But actually, because you get to put in the number of hours that they work, if you really did want to bring someone back in part month, you just adjust the number of hours that you tell the model. So in Alan's case, his practice manager there wasn't on furloughs, been there the whole time. So she's working 150 hours. You can see that nurse 3 and 4, he's not bringing back till July. So they don't start working and incurring costs until July, August, September. So for any employed, well, there's an adjustment section here because I know some of you will say, oh, well, but what about this, but what about that? So to try and capture all of these things, we've got adjustment columns for any clinicians who are employed, all the dental nurses and the support staff. When you get to here, you need to put in the split of those salaries because obviously the model assumes that you pay their net salaries at the end of the month, but things that you like PAYE, employers' national insurance contributions, you don't hand over to HMRC till the following month. So what you would probably do here is look at previous month's payroll just to get a sense of what that average percentage is held back and paid over. So you do the same for pension contributions. And again, an effective percentage of gross salaries, you would look at what historically you've paid for NI and take that as a proportion of the overall salaries to get a sense of what you need to pay. And again, the same for pensions. And here is boxes for you to put in the costs that you incurred the month before the model started, which are due to pay, you are due to pay in month 1. And then when you get down to here, you tell the model what the government's contribution is to the furloughed employees, whether you're still waiting for a furlough application payment to come through into the current month, and the timing, which will usually be a month in arrears, but you might be anticipating a delay, or you might think, or you might set it up so that you get paid in the same month. So that's all of the inputs. And yes, it's very, very detailed, but it allows you to build a meaningful picture of what your practice looks like. And by doing that, you can ask those really important questions. So let's look at Alan's example again, back to our dashboard KPIs. Let's focus on cash. So what does it look like with how we're doing? So we seem to be opening back up and building cash back up slowly. So that's good. In December, something happens and we have a bit of a hit. Well, what's that? Right, well, then you can now go and look at your cash flow and have a think. Oh, yes, I can see that in December, I've got tax coming out. Right, so that's why that cash fell a bit. But what about, you know, those dividends, that drawdown that Alan needed. He's not been taking any money out of the business for the last few months. He needs to pay his mortgage. So what would happen if Alan decided, let's be modest, and I'm going to take out £5,000 a month for the next 12 months? And what does that look like to my cash? Oh, okay, not great. Need to do something about that. At least you know it's coming. Oh, but we were talking about hourly rates before, weren't we? Alan's decided, you know what, he does need to follow for those AGP treatments, because he's worked out, you know, he doesn't have that physical capacity to be able to run multiple surgeries. Oh, so we said that hourly rate was going to come down. So let's say for Alan, his hourly rate's going to reduce by half, which is what we calculated before, to £90. And we think it's going to last until December before we come out of this. And the same for Katie. Let's say she drops down to £70. And again, maybe it lasts till December. So what happens to our cash then? Oh, it's looking quite scary now, but you know, at least I know it's happening because I've modeled it and thought about it. Right, okay, now I can think about what do I need to do? Well, my accountant told me about that bounce back loan. So let's put that in. Let's borrow that next month. I know I don't have to make any repayments for now, and see what it looks like. And I might need to model this again for the following year after I've done this. What does that do to my cash? Okay, I've recovered a bit. This is the loan coming in, and okay, yeah, I can really see that, you know, my business is, if I operated at those hourly rates, my business is going to be really sucking up cash, especially if I need to take out £5,000 a month to survive. So not great, but at least I saw that coming, and now I can make arrangements to respond appropriately. You know, if I'd done that generic, what profits do I think I'm going to make for the whole year and divided by 12, or I just didn't really think in too much detail and only thought about a single month, I might not have seen that coming until it was too late. So at least now I can think about, what do I need to do? Maybe I need to fix that utilization somehow. Maybe I need to play around with my associates. Maybe I need to play around with my fees and see how much I need to put each treatment up by. So once it's all set up, you can very quickly see those what ifs. And having done this, Alan is now aware what his business is sensitive to and the things that he needs to keep a close eye on, so he can see that storm coming before it hits. And every single month, he can come back and sense check that performance against his plan. So Alan's pretty pleased. Money well spent for a tool that's helped him to evaluate whether, one, his plan is a financially viable one, and two, if not, what his alternative strategies could be. And once he's made that initial investment in time and money to do this, he can go off and concentrate on making that plan a reality and spend his time being a dentist rather than worrying about how his current decisions are going to impact the business financially. And after COVID, you can keep using it. You know, I want to plan for a new associate. I wonder what would happen if I brought more ortho work in. What size does my practice have to be before I can run this completely associate-led and still make a decent return? What if, what if, what if? And that's a quick trot through what this model can do for you. And I'll hand back over to Alan.
Okay, well, thank you very much for that, Katie. It's the second time that you've talked me through it, and I think that for some practices, it's going to be exactly what they want. For others, I hope although it isn't exactly what you want, it's been very useful for people, for practice owners to sort of explore something in some detail, to be able to consolidate your thoughts about what do you want to do next. So I hope it's been of some use to everybody. Now, we've had a number of people asking questions about, where can they get the spreadsheet from? I've got some bad news for you, I'm afraid. That, we're not in this to create spreadsheets to send out to people to populate themselves. We thought long and hard about this process before we came to that decision. Our view is that it is impossible for this to be done without a finance professional discussing it in detail with the practice owner. You might disagree with me. That's something that we might have to consider in due course, but that is our view. So the way that it's available, it's on a project basis. It's on a fixed fee, because we know that that's what our clients want. We're going to run this project for £3,000 plus VAT per project per client. Now, for those that are interested that have more than one practice, we will agree with you a specific fixed fee based on individual circumstances. But the simplicity of it is, for most practice owners, it will be a fixed fee of £3,000 for the full hand-holding process. So if anybody is interested in that, then you can see our follow-up details there. For UNW clients, obviously speak to me, Liam, or Mike. And for non-clients, then there are our details. There were one or two queries that both Mike and I were attempting to answer queries as they came along. But there are a couple of ones, if I can pass them to you, Katie. First of all, there was a question about could the model be incorporated to calculate statutory levy. Actually, I'm not sure about calculating, but to perform the deductions of statutory levy and superannuation for presumably for NHS associates. That question relates to. That's the first one.
Yes, and at the minute it's probably accounted for by assuming that you know what those numbers are. So the short answer is yes, but the long answer is obviously that's a additional bespoking for individuals, and I guess it depends. I would ask the question sometimes before you go into a lot of detail, do you really need it? So you can be spending a lot of time thinking about how to calculate tax really, really specifically, but the reality is you're trying to give yourself a feel or a view of what the world might look like, and you're never going to be able to forecast to the nearest pound. So I would counsel whether you really do need it or whether an approximation is good enough.
Okay, thanks, Katie. And that's from Helen Elliott, who's a relatively new UNW client. So thanks for that, Helen. So yes, I suppose this illustrates the point that I was making before, that because of Katie and her colleagues' skills, we can build into it whatever you want. It's really a question of how relevant and appropriate it is. So in terms of there's a couple of more questions to do with the fee arrangements. First of all, this is actually from UNW clients Nick Hall and Connor Hitchens. From Nick's point of view, 3,000 over what period, and it paid in a lump sum or over the period. I'll answer the second bit first. We don't have a problem in taking payments from clients, even on sort of annual fees on a monthly basis. That's not a problem. But what does the period relate to? I'll pass it on back to Katie with your thoughts for that.
Sorry, say that again.
It's the £3,000 fee for creation of the bespoke model, working with the client through that period. How long do you think that process will take?
I'd like to think that we could get something up and running within a couple of days, and that's not necessarily because I need the time. It's more about the information that we're going to need from the practices. So sitting down with the principal, maybe a practice manager, talking through each of these things, sending them away to think about it. That's probably the bit that's going to take a bit more time. So it's down to the practice themselves really as to how fast it can be done.
Yeah. So yeah, I get that. It will depend on, it's the same as preparing accounts. In theory, it can take a very short period of time, but it usually takes longer because of interaction and information gathering exercise. But there's a sort of a question I think relates to that from Connor Hitchens in Bristol about is there a time defined period for the hand holding exercise? So I think with that, it's certainly not a situation that we prepare and say, there you are, it's over to you. What are your thoughts with that, Katie?
I think the initial setup, we get to a scenario and that's probably the end of that particular handhold. And then obviously by doing that, you've been trained on how to use it. So you should be able to go on and run those different scenarios yourself in the future.
Yes, and just to sort of in the usual UNW way, there is no way for people that enter into this process that we would leave you high and dry. So even if you are somebody that is just particularly not well attuned to using forecasts, even after you've had specific training or your specific or your practice manager has had training, we're not going to leave you high and dry in that. There would be I would like to think, because this is what we do with, for example, when we do zero training, where we charge a fee for the hand holding and setup situation. After that, within reason, we'll support you during the time that you're a UNW client. Now, that doesn't mean to say that our experience there is that people don't come back to us every month for 2 hours of time to help them do the monthly update. It's expected, a bit like riding a bike, that you will be able to do it yourself. But when you have queries, that reasonable queries that follow on for that, we would support you. Okay, so looking through here. Yeah, there's a question from Viren Vithlani. Can the model be altered later when we're back to normal? So the answer to that is definitely yes, it can. That is the point with this, that it is initially, I think it's fair to say, we wouldn't have had the idea of creating this at all were it not for COVID. And in particular, this came from me being on webinars where it just seemed that things go through different waves. There was a lot of furloughing, there was a lot of situation with practices worrying about whether they're going to go bust when they were closed down. Then all of a sudden, I can't remember exactly when it was, probably about three weeks ago, what everybody wanted to talk about was recovery forecasting. And I remember being on a webinar where somebody, one of the questions was, I think it's an extra £40 per patient for PPE. Do I have to put my fees up by £50 to cover for that? To which my reaction was, because I'm an accountant, you simply can't look at it that way. There are other variables that need to be taken into account. My knee-jerk reaction was to produce the one-page forecast the first one that I did of any sort of sense came out with using that model, £40 extra PPE, and it came out within the very simplistic model of something like £100 extra fee per patient if you wanted to retain a profit level that was in line with pre-COVID. So that was my knee-jerk reaction to build in a very limited number of variables. What we've been showing you tonight is the other end of the spectrum, with just about as many variables as you could reasonably want to model, together with a system that enables them to be encompassed in a way that initially a finance professional can set up and show you how to operate, and after that you'll be able to do yourself. So yes, it can be used when everything gets back to normal. It's an ongoing tool that's available. Okay, one question from Stephen Robb here, joined the webinar late. How can we access the recorded version? Just pop me an email. You've got my details there. Our marketing manager, Richard Turnbull, is keeping a mailing list that's already been started from people that couldn't access this, couldn't arrange the time to see this. So please just pop me an email and we will send you a recorded version of this. Okay, so I think that's everything. I'm checking we've got two different message boxes here. Let me just see. All right, yes, so just the question from Steve Pratt, who's actually saying that this, to paraphrase what he's saying, that a version of this sort or software of this sort would be very helpful to the bank, invaluable to use his words. What else have we got? I see that Mike has kindly answered. I think we've probably covered everything that's come in on the various chat boxes and questions. So thank you very much indeed. I'm just going to check here something else. I see we've still got 181 people watching. We were up to a peak of nearly 300, and you'll be very pleased to know that when I stopped finishing, lots of people didn't leave to make the tea. They all stayed to watch you, Katie. So thank you very much indeed to everybody. I hope you've enjoyed it, even if it was just an information exercise. If there is anybody who would like to take us up on our offer of us working with you, we have a limited resource. I think that's fair to say, but we'd be delighted to work with you if that's what you think would be helpful to you. So thank you very much to Katie. Thank you to everybody that's attended, and if we can help you in any way following this, then there's our contact details in front of you now. And after that, goodbye. Thank you.